Well, hello there, and welcome to another week, another big merge roundtable. We're going to talk just about a few things this week, not a ton of topics, because I feel like the news is pretty focused on like one or two things, maybe three if we're lucky. We're going to be talking about, you guessed it, ETFs and Bitcoin ETFs. We're also going to talk about the custom GPT store. We talked a little bit about it last night on Web3 Ready Live, and there's some enterprise news that really got swept under the rug. I'm going to try to see if we can't, make some hay out of that. I am joined today by Frank Kushner and Ryan Harper. It's been a minute since you've been on the show, man.
Busy.
Yeah. So stay tuned, and we'll get into it. So
I think the best place to start is Frank's attire. Because here I thought Frank was an RIA, suit and tie, and then Bitcoin, it gets an ETF, and now he's broed out. He's a crypto bro now. He's either a crypto or Bitcoin bro. One ETF, and he's like, I'm a bro.
Well, here's the best part, and this is what I love about it. It's like welcome to the Borg. You guys have just been acquired by the financial services industry.
Bitcoin has been acquired. Yeah, I mean, quite literally.
You look at all the different things that BlackRock announced today, including buying all sorts of other data assets. They're into it. Fidelity's been into it. You guys you wanted it. Here it comes.
Right.
So I think one of the big topics that now that we've had a minute to come down off the high that Mark Shutt was on, and because that was very reflective of most of the crypto world, is there was a lot of shuffling around. There's $4 billion worth of shuffling, but I think it was a net increase of like 400 million or something like that. It wasn't a ton, or no, it wasn't even 400 million. It's like 4 or 8 million or something like that. There was a lot of outflows on GBDC and a lot of inflows on the BlackRock and the I think it was the Valkyrie instrument. Obviously the price peaked out at 49K for Bitcoin. It didn't go to the moon necessarily. What is your thoughts on that? Why could that possibly be? I'm turning to you because this is your world now. We're living in it.
I can't have an opinion?
You can have also opinion. Why don't you start with yours and we'll have Frank come and correct it, because neither one of us are going to know.
This is not necessarily my opinion. Obviously, I'm not really that informed. I just talked to a couple people here and there. But the one theory could be like the market makers, the players that would have actually moved the market had already priced that in. It wasn't exciting to them because they had already been ahead of the curve, weeks, months before. So for them, there wasn't an excitement level like the Mark Shutt excitement. It was just like, yeah, it's another Tuesday. It's already priced in. And that, to me, that's the main reason you didn't see like a big thing. Or this is something I kind of think is maybe that 30% correction is coming right on the corner because all the people are getting excitement, and then the market movers are going to short everything just to wipe people out. And then they'll have the next bull run. And that's not financial advice because I have no clue what I'm talking about.
Okay. Interesting.
So from there are hundreds of reasons, right? The shortest one's the one we talked about, more sellers than buyers at the end there, right?
Sure. Yeah.
But you also have to take a look at the difference in the disciplines of the people that were actually buying and selling the security. Now, if you're talking about institutions, these are companies that have discipline, and they are going to want to buy it at their price, whatever that price is, and they'll sit on that order until tomorrow if they don't get it today, right? They'll just keep working it, and then you've got futures and derivatives markets outside of the United States. Most of these big institutions definitely have relationships there as well. So when I say welcome to the regulated world, you are no longer bound by, one crypto bro who has, 20 Bitcoin that's going to move the market substantially in one way or the other. Now you're going to have people that have sophisticated math models that are actually going to play those models against any currency, any application, anything that they can actually arbitrage. So you're going to see a much tighter market, narrower spread, and I don't know what the transaction fees are going to look like eventually, but if you take a look at what these institutions do and how much they're planning on charging for their administrative fees compared to what they're going to have in assets under management, they're expecting that compression. They're expecting that those transaction fees are going to go down because they're the ones charging it, right?
Well, then there's also and these are internet theories. I'm going to start peppering you with them, and you can say how smart or dumb they are. The traditional markets move a lot slower, right? They don't it wasn't like it was clear to those of us that lived in the Bitcoin world. But if you're, a boomer that's wanting to manage your retirement fund and put some money into Bitcoin, you may not have known that, the ETFs were going to get approved, right? It was obvious to us, not obvious to my dad. So you've got to wait for those wires to clear. That could be a day or two. Then you got to wait for the asset manager, your financial advisor to go, okay, now's a good time. Now's a bad time. The price is too high, whatever. You should wait, or no, you can go ahead and reallocate. Like there's a bunch of, we're used to 24-hour markets in crypto, seeing an instant, it's like looking at a Twitter poll, it's like an instant result. And that's not how Wall Street works.
Yeah, and you'll see that too. You'll see that there will be different markets around the world when the markets are open, when the markets are closed, and you'll see more volume, obviously, during times when markets are open that trade that commodity, if you will. So in this particular case with Bitcoin, right, our markets are more or less, 9 to 5, right? 8:30 to 4:30. So long short story, we're ready to hit the button when the bell rings, when the bell goes off. But after that, it gets after hours. And that's when probably amateurs are going to continue to do that. And that's when you'll see bigger swings in the market because you can move the market with a lot less shares. And I guess it'll still be a 24-hour market for a lot of people, but you'll see more of the volume, I suspect,
and
in the trading day.
There's also a lot of questions around like how each one of these funds is going to work. What's the right fund to jump into? There's 11 funds, right? And so like which one is the right one to get into?
I guarantee there's going to be like a points guy kind of deal, right?
Yeah.
Remember when it was originally, it was just one guy that just flew around and tried to figure out how many points these different entities were going to give you. And it's the same thing, because if you take a look at and I don't have them all in my head as far as all the different companies, but BlackRock, Fidelity, and they each all have their own fee and fee structure. Like some are giving you 6 months free, and then they're going to give you that. So if you figure over a year, if you're the points guy, you're going to, I'm going to be in this one for 6 months, and then I'm going to shift over to this one, which has like a longer, shorter fee. That's why it's always a race to zero. You start at the highest level. Ask me how many of my clients have ever agreed to letting me raise their fee once that I got them on to sign the dotted line. Yeah, not going to happen. Right.
One thing that I haven't heard anybody talk about is the culture change. And what I mean by that is in the
well,
New York,
I'm not wearing a suit. Look, at least I'm wearing a shirt now.
You're killing my train of thought, bro. What I'm saying is like the New York money, the trading floor,
Chicago, by the way. This is
like
Chicago,
all these,
yeah.
but to them, it's just hey, there's a trade, makes sense, cool, make money. There's zero emotional component to the trades. In the Bitcoin world up to now, there's a huge emotional, like Bitcoin maxi culture. It's Bitcoin, not crypto, blah, blah, blah. It's like,
well, that's a perfect point. That's actually where I was going to go with this, because the GBTC discount that's existed probably accounts for the huge exodus of funds. Because converting to an ETF, that discount is disappearing.
Yeah, that is exactly a trade that a really good friend of mine had put on, and he was having very sophisticated investor, very smart CFA level guy, and he you look for the home runs, you look for the singles and the doubles too. The singles and the doubles are the really important ones. And if you can lock in a 5% discount, right? You buy GBTC knowing that Bitcoin itself is going to be worth what Bitcoin is worth. You invest, and then maybe you take a position on the other side.
At times it was like a 60% discount. It's
yeah,
crazy.
And here's the worst part about it. He was laughing at it. He was like, here's my fun part though. I sold ETH to get into GBTC to get that to get that discount correlation, and meanwhile ETH ran up 16% in 2 days. He's like, so everyone's chasing the same trade, and so whenever people figure that out, they'll arb it on the other. So like basically, if you've got Brent crude, you can hedge that with gasoline. There's different commodities that if you hedge it in a different way by buying or selling a different commodity, like you can hedge that, and that'd be one of them. It's like, oh, I'm going to go long ETH and go short Bitcoin and lock in the difference, because they're both correlated as far as like if one's going up, the other one's going up too. Yeah, but in this case, if you would have thought, well, of course everyone's going to sell ETH to buy GBTC. I'm just going to sit here and I'm going to buy ETH, be contrarian, watch that one run up the minute that people get locked in on their GBTC, right? So that's what you're going to see. You're going to see a lot more people that are used to that type of mentality versus the people that were just structured on, the individual coins on Coinbase and trading those pairs. And now it's down to more or less 2. I'm really interested to see what's going to happen with this ETH one whenever the ETH goes. Whenever they do ETF for ETH.
And forgive my ignorance here, but like part of like a couple of people I know, like when it comes to Bitcoin, they hate like Coinbase or these other trading platforms because at a certain point they're limited on what they can trade. They're like, and it freaks them out. Like, what do you mean I can't move my money like this?
But that's what you're paying for. That's what you're paying for. You're paying for someone to do due diligence and to let you know whether or not there's a coin that's actually doing what it's supposed to do or not, right? Because what does it take? You were telling me, I think, that all it takes is like a friend to take the other side. You create 1 billion coins in your blockchain, and you just get one friend to buy one coin for $1. You just become a crypto billionaire. Yeah. Right? So if you're marking it to that. Now, I don't think that that's a plausible way to be a billionaire. So I say that Coinbase is going to say, no, we're not trading your coin.
Well, that makes you a paper billionaire. Yeah. That doesn't make you like a market billionaire. Like if it creates $1 billion tax burden, if you can have someone wash trade the other side of it. But if you've got like a fake, or not a fake coin, but a real coin, but like a token that you just, minted on the blockchain with 0 value 5 minutes ago, but you've got, $1 million worth of Ethereum, you can throw that into a decentralized exchange and make each coin worth $1 million. And it doesn't even have to trade. It'll show up with that value. Of course, no one's going to know about it. No one's going to play with it. And you can pull that value immediately after the first trade, and you've established a market value for that token.
Yep. And I could code in C++ something, put it on a floppy disk and say that it's worth something. And until somebody actually buys it, it doesn't matter. It's the same thing, right? You're actually just basically coming up with what I would consider like a shelf registration. Like if you wanted to do like a reverse merger, because you do know that you have got technology that you could put on the blockchain, but I want something dated. Like how many of these companies and people bought a company that had a clean balance sheet that literally wasn't worth anything other than what they put into it, because it's got 4 years of existence.
There's no profitable reason to do what I just described. Just like there's no profitable reason to do with the shelf corporation unless there's a legal construct or a tax reason for it. So like,
I'm sure the lawyers are coming. Don't worry, they'll help you figure it out.
So quick production note. I was gonna bite my tongue at the end. Stop banging the table, bro.
Can't do it.
Like you're kicking
ADHD. You're gonna have to learn about learning differences. You're gonna have to learn about them.
DEI, Ryan. DEI.
DEI. What is that?
Diversity, equity.
Oh my god! No, that's not on this program. But you're killing me. I mean, like from a producer's hat, it's like if I had my phone, I'd be like,
you're not in the producer's chair today.
I know, but I'd be texting Paul. Soto, I'd be like, can you please put on the screen for him to stop banging the table?
And it would go up completely ignored.
Anyway, my bad.
So,
I had to get my piece out.
Right. Anyway, okay. So Yeah. Did you have? You looked like you had something else to say. Was it just about the banging of the?
I wrote that I was cut off.
You were cut off. Go ahead. Do you have anything else?
Well, the point I was trying to get to was, does this have any impact? Because now it's part of a larger ecosystem. Because you're never going to be telling a Blackstone or these larger funds that they can't move money. So if they're buying $10 billion worth of Bitcoin, like, and again, maybe I'm showing my ignorance that I don't know.
That's what I was agreeing with you.
The point I'm trying to make is, like, if I'm buying a shit or a ton of money on Coinbase, and then Coinbase says, that's great, we're going to take your money. Okay, I want it back. They're going to be like, no, not so fast. It's in Bitcoin. And then you have to stair step your money out. Does this impact any of that?
You mean like the withdrawal limits? No,
or withdrawal or transaction, or anything like that.
So you're talking about withdrawal limits on Coinbase, and that is annoying. That's what a lot of people don't like about it. Right. There is no the way these ETFs are regulated. There is no we can't. There was actually one of the sticking points why there was a delay. Is you can't have there's no ability to fund it or remove funding from ownership of these ETF shares in crypto. The SEC wouldn't allow deposits or purchases made in crypto. It can't be in kind or something like that was the word that they use. So like there is definitely going to be, this is a derivative that's only tradable in dollars. And as far as the SEC's regulations concerned.
And then also on that, is it like, because again, I've not studied up on it. I'm just showing my ignorance. I'll be the layman for the idiot on the internet.
There are no dumb questions.
I differ on that. But like, so how does this really impact? Because people could already transact with Bitcoin. Is this just making it legal for like the big boys in New York to start playing in that world? Is that what this is? Essentially, let mutual funds jump in it as well?
So there's a lot of, I'll let you give the real answer. But for what Mark and I were talking about yesterday is it's horses for courses, right? Like you're always still going to be able to have custodial Bitcoin. If you aren't good at managing your private keys, there's always Coinbase and things like it.
Right.
But you'll never be able to put your Coinbase account without jumping through a lot of crazy hoops inside of your IRA or your 401k. And that's the number one use case I see for it. You probably see a bunch of other ones, knowing the industry better than I do.
So to address one part of the point, it's ETF is about as efficient as it gets. Mutual funds are all kind of, this is why you're seeing BlackRock and Fidelities and some of these companies come up with ETFs or ETNs, depending on the security. But they're a more efficient, tax efficient, and fee efficient vehicle than a mutual fund. So you're not going to see you're probably not going to see any mutual funds that are crypto, if you will. Secondarily, the big ability here is that you've got companies like real major companies, insurance companies, any AT&T, phone companies, whatever it is, that didn't want to take crypto as a payment because they don't want to keep it on their balance sheet, period, right? They don't want something that swings so wildly from one day to the next on their balance sheet, because then they have to keep track of that on their profit and loss statement. And how do you do that efficiently? Well, what has happened is that now you're going to be able to see that these companies are going to be able to take crypto in some form or fashion and keep it on their balance sheet because they could sell it immediately efficiently, right?
Well, that was one thing with like
and I don't know how many steps there are in between that, but this is what this leads to. That's what this legislation leads to, is that it is an actual security that can be traded on an exchange. They have validated for the most part that it has a use case and that people want to trade it.
Well, that's one thing, like with the politician class, like that, the ones that were taking like Bitcoin as donations, most of the time, at least every example I've ever heard of, they were immediately
selling it for
the cash. One, I don't know if it's a regulation thing or just because they didn't understand it, or they wanted to spend it.
Well, they're definitely a political campaign is not they're not day traders on staff,
right?
So they don't want to sit there and have the thought, okay, am I going to have more if I hang on to it for a week? Because I don't necessarily need to spend it today, but like I also don't want my donation to be $1 less, even $1 less than it was when I got it.
But going back to Frank's point about like the AT&Ts, whatever, it's like when you've got Nancy in back there, and it's like it's easier to understand how much cash you have in your coffers versus cash plus Bitcoin plus whatever.
Look at what happened to Enron, right? Enron, they were trading the
That was that
commodities.
company that was against that's still killing it in the market today, right? They just did amazing things, and they set the standard.
You might be thinking of a different Enron.
Company and corporate ethics.
So Enron was like an energy company, and they actually had a trading desk, and they actually traded, and then they had losses, and they went to zero. You don't
it must be a different Enron.
You don't want a company as a company. You don't want to take risk in that way, really, because you're then relying on people that are just buying and selling stuff to affect your bottom line, which is what a company doesn't want. A company wants to survive. It doesn't want to take risk. So other than getting fees and getting more assets under management that they can do other things with it, right? That's what BlackRock wants, and that's what Fidelity wants. So more assets so they can collect their 39 basis points and make the difference between the transaction fees and that. Just an efficient way to gather more assets. Now, if you're a company like Prudential who wants to accept Bitcoin or allows accepting Bitcoin for the value of a premium payment, not true, by the way, this is just made up, but they would want that dollar in dollars at that moment so that they could invest it in a way that would make sure that the money was there when I died. Right. So they're not going to gamble like that. Now, a lot of people, there are some loopholes for all of you guys out there that have a ton of crypto and are looking for ways to legitimize it and pay taxes on it. What a lot of people do when they have restricted stock or when a company goes public is they'll take that stock and they'll donate it directly to a charity, whatever charity it is, whether it's a school or a donor advised fund. But the minute that money hits that donor advised fund, the charity is going to sell it. They sell it immediately that minute, that day. You get the deduction for the full value of the stock, right? So if you were an investor and you had like 10,000 shares of Snowflake and your basis was $10 and it goes public and it unlocks and it's like now $200, you could donate 100 shares of that to the church and get the value of 100 as a tax deduction. Right. And they're going to sell it immediately. But what's your basis? Your basis was $10. The difference between that $10 and that $100, $90. If you would have sold it yourself and then donated the money to the church, you'd be responsible for the tax because you sold it. But because you sent it directly to the church and they sold it, there's no tax value. So you get the bigger value by donating that appreciated security. And what are they going to do? Do you think they want to sit on the stock? They're not venture capitalists. They're not traders. They're not private equity people. They're a charity, and we have bills we have to pay. They're going to sell it. They're not going to gamble on whether or not it's going to go up or down in value. Right. Does that make sense? Hopefully that answers the question a little bit better situationally than trying to explain to you why they probably wouldn't want to have a proprietary trading shop.
I mean, I wish if this back in the old days when I did a lot of stuff, we'd have golden nugget. Like to me, that's a huge nugget of. Like, I didn't even know that was a thing. Like, obviously you have donations, whatever, and people in the donating and tax deductions. But to me, that's almost like it's not really a hack, but it's like, hey, instead of donating your X dollars that you have, that you've already paid taxes on, donate this piece of paper that evaluates at a better, that's just huge. Mm-hmm. Like, I think that's a huge loophole or whatever, hack or whatever you want to call it, that probably most people aren't even aware is a thing.
Do you remember when we were doing I think it was the Roundtable, and I kept stepping out of the office on the last day of the year?
Yep.
That's when that happens.
You definitely were not cussing up a storm in the other room.
You can't. You have to be efficient. It's kind of like when I was riding the Hotter than Hell 100 and I cramped up both like on the last 20 miles and I couldn't cry because I knew it would take energy. So you don't. You just swallow.
Well, it must have been a different Frank because the Frank I saw was definitely dropping a word or two.
so people will always wait till the last minute to do anything, whether it's paying their taxes or making those charitable deductions. And so, the charitable organizations will send out emails on the last few days and say, hey, don't forget about us. You probably have some matching grants, because most companies will actually match funds. So if you donate $100, they're going to give $100 to them as well. And they know that, right? And so they reach out at the end of the year, which means someone like me can't take a vacation. Thanks.
Right.
But, the last day of the year, it's geared for that because, again, there is a huge tax benefit to donating by the end of the year some appreciated security. You can take it against your taxes the following year. And you don't have any risk between now and the following year that it's going to go down in value.
Mm-hmm.
Take the deduction at a high price. Get the highest deduction you can. So when your taxes are due, you have something to write off against it.
One of the most interesting blockchain workshop sessions I've ever been in is there's a couple of Dallas tax lawyers that specialize in crypto that have run them, and all the weird loopholes that you can do, like when you're buying property or when you're trying to reduce your tax burden with crypto that you can't do with other financial instruments, or it's very difficult because what all the tax lawyers I've talked to that specialize in crypto, they say, think of Bitcoin when you're doing your taxes the same way you think of gold. Almost all the things you can do with gold, you can do with Bitcoin. But the difference being, of course, is that it's a digital asset. So the things that make it things that are difficult to do with gold are not necessarily difficult to do with Bitcoin when it comes to like payments and stuff. So like shaving off a piece of gold doesn't make sense, but like parts of a Bitcoin obviously do, So it's just like, I'm not going to try to even give tax advice, both because I don't want to go to jail and also I would get it wrong.
I'll give some tax advice.
Sure, go for it, please.
As zoom in.
As the CEO of the company.
CEO of a company.
No liability whatsoever.
No liability. Tax advice.
Pay it.
Pay it.
Okay, there you go. Brilliant. Thank you.
You're welcome, Internet. What?
I didn't know where that was going. I was just waiting.
You were like, I'm out. I'm out.
So Hill's on the technical difficulties button.
Bruce, I think someone just said something I shouldn't have been involved in.
No, I think also the real advice there is stay in your lane. Like if you're not a tax specialist or tax everything, hire that out. Like bring people in the circle that know better than you. And like I'm all about DIY and figure out on how to do things. But when there's real consequences, like Wesley Snipes going to jail type of consequences, and we don't need to get into that, hire a professional, you know?
What I would say about for those people out there that actually do have crypto, one of the things that's really neat and as I've been doing my deep dive into fiduciary duty, what I think is interesting is that I know that if I had a client that had a concentrated position in any specific security, any company stock, get in touch with, maybe go onto a mutual fund site or see who the largest holder is on Yahoo of that security, right? Large institutional player is on that security, and try to get in touch with their desk and say, hey, look, I've got this security. I want to work something out with you guys directly, as opposed to having to, there are creative solutions for people that have concentrated positions, and derivatives can actually be created based on whatever your holdings are. It just is a matter of scale. If you've only got like 3 Bitcoin, don't bother, right? But if you've got a substantial holding, there are things that you can do. You can, call up attorneys and try to get opinion letters. You can get them to discuss with the IRS what your situation is and come up with a specific amount of money that you could pay in taxes if it was held offshore and you wanted to bring it back on shore. You wanted to be able to spend the money here, get an attorney to discuss with the IRS, get that tax paid, and then the money's liquid in the States again. Maybe it'd be at the same rate or better, but there are ways to bring your money back into the United States legally if you want to use them, because otherwise you're just sitting on a pile of gold in the middle of Manila, surrounded by other people that have like,
it actually sounds kind of fun.
I was gonna say, it's like, what do you?
This is all based on the crypto.
What's the downside?
Long point short is, if you are somebody that has crypto and you have it offshore, or you're worried about, but not being able to use it, you're sitting on a pile of gold and you can't use it because like there's no way for you to do it without getting in trouble. There are ways to get out of it. Talk to an attorney, talk to a professional to help you navigate that path, and then make that available to the rest of the economy. I'm just saying, just sitting on it is not doing you any good, and it's not doing the ecosystem any good.
But circling back to the culture aspect, because like I was at a meetup last night, and I talk like you, crypto this, crypto that, and it was a Bitcoin meeting. Bitcoin, not crypto. Bitcoin, not crypto. It's like, does this ETF, the Bitcoin ETF, does it have any other than being like a door opener for other projects, does it have any impact on the crypto ecosystem other than Bitcoin at this moment in time?
Thankfully, hopefully, it will dilute the maxi culture. That's the biggest impact I think it'll have, because in the real world, as all of us at this table know and understand, and I'm sorry for the maxis that watch this show, you're about to get upset, is there is no difference in the mind of the normie between crypto and Bitcoin.
And that's one of the things I was trying to get to before about like, and this I was telling these people last night. It's like the higher you go, and I've been fortunate enough to be in rooms where you have the higher up bankers, the higher up politicians. You can infight all you want here, but when you get to the actual power level, it's all the same in their mind. Crypto, Bitcoin's the same thing. It's that digital thing.
Yeah. Well, I mean, and I could get irritated and talk about this for a minute, but like Bitcoin literally is a cryptocurrency. It's right there in the friggin' name.
Right.
And there's only a small, tiny slice of Bitcoiners compared to the people that actually use the stuff, that believe that there's some sort of difference. And this will only further dilute that number. That's a major thing. But there's also the negative consequence, that I would say negative to the price consequence, because that cult of people who believe that there's a difference are also the people who popularize hodling against all, financial advising odds, are not going to be their amount of Bitcoin held compared to the amount that's out there in the circulating supply is going to be diminished. I mean, Michael Saylor still holds a pretty big amount, and El Salvador holds a pretty big amount, and then there's a bunch of other large whales that will hold a large amount, but that's going to dilute over time.
To me, the irony is the fact that these people, or those people, whatever, I don't know, but like the maxis that are so anti whatever. Mm-hmm. I think with the ETF side of things, I'm going to you because you're the only RIA guy I know, but like with the ETF, it dilutes the culture of it. And with that, to me, the irony is that it should, in theory, benefit the maxis, because if the more infrastructure, the more engagement, the more use cases, and people are actually buying and selling and trading, should, in theory, drive the price higher. But the problem, I think a potential problem is like, well, it was going up no matter what. It's going to $1 million just because. So anyway.
Yeah, it was going to go to $1 million at the pace. I still believe that $1 million is not an insane number to throw out for Bitcoin price per coin. But it is insane to think that it would happen this decade without some sort of institutional adoption.
I wonder what they're going to use. I wonder what they're going to use to value. Like, because they know how many were supposed to be out there, but how many are or aren't lost. Like, how do you value that? How are you going to figure that out? Because that's part of the market.
See, that's the thing. That's like, it's one of the things that's not. It's not. It is and it isn't priced in, right? This is why I was like really kind of like the few times we've talked about it this week, I've said like, look, what's the Coinbase Pro depth? Because most of them seem to be using that as their origination to acquire whatever spot that they need to get. The amount of if you go to any of the centralized exchanges, the amount that's available to buy is nowhere near the circulating supply. So there is a real potential for a supply shock situation where the price, like, it doesn't matter how many have been lost, because so very few are available to trade, that we're talking like 1% of what's available.
But I think you'll see that a lot of that changing, because you're going to see the adoption, or you're going to see in order to have these ETFs, they have to have that in crypto, right? They have to have that in Bitcoin, right? So in the Bitcoin ETFs, they have to have that, whether they're borrowing it from somebody who has it and are paying them a fee for having ownership issue. I'm not even trying to figure that out, but basically, you're going to see the institutions start to acquire those, kind of like you see the governments had acquired gold, right? They got stores and reserves, and where they get that, they got from people who were mining it originally and eventually consolidate it. And you will see that happen with the financial services and with the countries, right?
Well, sure, but
the United States already has a bunch of it, right?
Well, I mean, so Hill, can you pull up that Bitcoinerty website we've looked at a couple times while we're talking about this? But I'm not saying they won't have custody of it, but I'm saying the availability of it.
Oh yeah, no, I get that, but that's the same thing with the stock. Like you could have a market value of IBM of X, but the float, the amount that's actually out trading under circulation, might only be like 10% of the company itself, right? So the rest of it is, like you mentioned, it's like valued based on what it's trading for,
right?
And then they take that into consideration for the enterprise value. But we saw how that works when you look at a company like Sam Bankman-Fried's, right? XTF that went to like not zero because they surprisingly, I think they had some private equity investments that actually bring them back up. But literally, like once you have a run on it, when that 10% goes to zero, then the rest of the company went to zero too, right?
Yeah. So this is for the people that are watching. What I'm saying about, so when I talk about supply shock, if you go down that depth chart and you hover over something next to one of those cliffs, it'll tell you like how much you're able to buy at a certain price point or able to sell at a certain price point. And this is Bitfinex, which is one of the like second to basically Binance and Coinbase in terms of volume. And if you buy, go to the top of that cliff on the right, on the red side, the top of that cliff there. What's what is it saying there? Because
425 can be bought for 18.8 million until price goes.
Yes, $18 million, and it goes to, what's the price point?
44.
44. Right.
44.40.
So you spend essentially $20 million, and you're going to raise the price of Bitcoin $1,000, which in the context of an ETF is a rounding error.
That's what I'm saying, is you're going to have greater liquidity pools though, because they're going to have more.
But there isn't.
Not right now. You don't see it right now. Well, believe me, as time goes on, they will find a way to make this.
But you can't. Like, there's only what's available is what's available. It's like you can't manufacture more Bitcoin.
I'm aware of that.
Yeah, I know you are. But I'm just like, where's that extra liquidity going to come from?
Whether it has to be, as I said, a so hypothecation agreement, margin. Have you heard of margin?
Of course.
Are you trading on margin? That's the same thing. So they're when you sign an account application at some financial services firm and you sign a margin agreement, what you're doing is you're allowing that company, whether it's XYZ financial institution, to margin your stock. That means that they're letting you are giving them the ability to loan out your stock, your IBM, your XYZ company, and they are doing two things. They're giving you the ability to borrow against your own stock up to 50% or 75% or whatever number that, depending on the type of the security. But they're going to allow you. And so people think of that on their side. They're like, oh, that's sweet. I can actually buy more equity and I don't even have to come up with the money myself, right? But the flip side of that is that they can loan out 100% of your security to some other institution and collect a margin on that. They collect the interest on that. That's how these institutions make money. So that's the same thing. They're going to just say, okay, as an institution, we own this much. We'll loan this out to you. Right.
And
so they don't own it.
And then the U is the ETF. So the ETF won't have custody of it and they won't own it, but they'll be able to say they do.
Right. They get to borrow against it, or they're going to have an agreement that says that this is ours for the time being, for some period of time.
It seems problematic.
Yeah. And it's worked for years.
Define worked.
So if you take a look at, if you're a bank and you've got $100,
that's like a house of cards, so right?
But that's what the banking system is as a whole, right? If you're Mark, you have $100 and you go to the bank and you deposit that $100 and they're able to loan out 85% of that, right? You technically still have $100 in the bank, but they've loaned out 85%. So they loaned out $85. They loaned it to him. He took that $85 and he brings it into the bank and they loan out 85% of that to someone else. Now they've got $185 on deposit from you two, but they still have 60 out. You only had $100 to start with. Why is there so much more? Well, because they created, that's what a bank does. Right. They create money. And when they raise interest rates, and then that bank is now underwater from that 1% that the interest rate went up, that's when all of these things starts to collapse and come back into themselves. And that hasn't happened. And that's why the market is
so it's the whole, it
where it
works
is right
until
now.
it doesn't. It
Yeah.
works until you have a market. It works until you have market like fear, and then you have run on the banks.
But you also have to take into consideration how many people actually really want it, right? Like up until now, it's just been, everyone's been talking about it for so long. But now that it's here, let's see how many people care, right? There's been a lot of,
Okay,
like, everyone loved AMC as a stock until it didn't matter
well,
anymore,
sure. Well,
right?
I mean,
So let's see.
yeah,
Let's
but
see if that
that's
happens.
switching topics, though. That's not saying that this is going to work. I feel like that's problematic. We're already seeing cracks emerging in our banking system from our overuse of this. We saw a huge amount of bank failures in last year, huge. And we talked about them on this show. And that's not even the only era where we've had a huge amount of bank failures since 1971, which is when we started doing this. So, and Bitcoin is the response to these cascading bank failure problems that have been occurring since the 2008 housing crisis. So like I think these topics are intrinsically tied together, and to say that these ETF, I mean, I really feel like I need to go through these filing documents and understand what they're allowed to do and not do, because that's, if you're saying that most of what they're saying is backed could be through like rehypothecation agree, like these margined.
Yeah, look at them.
That would be insane. That would be a very insane.
I've done zero research into what their documents say. I haven't bought any of them.
Sure,
at this point. But I'm like to wait until things shake out before we figure out what's going on. Yeah, I had a holding in GPTC, or we have a couple of clients that have it, but they bought them on their own. None of this stuff, like, really. I'm waiting. Again, it's buy the rumor, sell the news. Okay, the news came out. It's free. I don't know where it's trading at now, but I bet it's down.
Well, that's what, going back to what I said earlier about like the players, it's already priced in for them. You know?
No, I don't think it's. I think this is like one of the important discussions. If you want to have the big answer to the big question that we've talked about at the top of the show, why isn't the price double or triple or $1 million? Is we don't even know.
More sellers than buyers.
We don't even know if they're going to have real Bitcoin backing this thing. We just identified 2 or 3 ways where they can't, or where they wouldn't. Right? If it's fake Bitcoin or paper Bitcoin, you know.
Now that you see that the thing has been approved, you can see exactly what's been approved. Yeah, take a look at that prospectus, read it, see what it says, see what it is actually backed by. For me, it's, I'm comfortable in knowing that they've done enough due diligence that, I'm pretty sure that the amount of assets under management that BlackRock has compared to the amount of the size of their exposure to their Bitcoin ETF is probably pretty small, marginal. So I'm not worried that they're going to go out of business. So I'm still comfortable that if I were going to buy one of those, it would be one of the guys that has a pretty heavy P&L and balance sheet.
What's funny, you saying that, and this might not be relevant for this conversation, but like, I'm just thinking about like everybody that I know that has a significant amount of Bitcoin or perceived amount, because you never know what's the number one rule. But crypto, don't talk about your crypto. But anyway, that I can assume has a ton of Bitcoin or crypto assets. When you really talk to them, and I'm like, man, they got all this. It's like, it's still like less than 5% of their entire portfolio. So these guys, at least in my experience, that are, and I'm just throwing out random numbers, but the people that I know that are heavy into it, it's a fractional. I mean, they're still doing the smart way of trading, because that's how they made their wealth in the first place, is they're not all in on one thing, other than maybe somebody at this table.
That's what theoretically speaking, that's, you're always going to invest in the things that you are the most comfortable and familiar with. And that is a principle that Peter Lynch has, wrote in every one of his books and has been kind of mantra from time memorial, right? Your investment in your company is, you're like, are you all in on that? Yeah. I mean, that's your whole net worth, right? And the same thing for every other person. His whole net worth may be tied to crypto because that is what he does.
Right.
And his net worth may be tied to Ethereum because that is what he does. And he knows it. He understands it. He is so comfortable with it and so absolutely sure that it's going to be 100%. I'm not going to tell you no that it isn't. right? But like for the person who is an actual investor that wants to have exposure, wants their money to work for them, then yeah, maybe 1 to 3% position in alternative investments, 10% in alts in general, and then maybe 1 to 3% of your portfolio should be in something like this. We could do that.
Hypothetically, because you're not giving advice.
Well, no, I'm just saying that if you do models, and anybody that doesn't use models to some degree is like just throwing stuff at a wall, right?
Mhm.
Unless they have literally the
domain specific knowledge.
they're if they're we are a top 20 ETF and we only invest in the top 20 stocks in the S&P 500, that those are well-defined constitutions, and that's why there are different money managers with different goals, right? And you want to find one that you feel the most comfortable with, right? And so whatever that is going to be one thing that's part of your portfolio. In this case, alternative investments is 10% of somebody's portfolio in general as an investment. Sounds pretty reasonable based on the fact that we know what stocks, bonds, cash does, and alts do other weird things. Maybe out of that 10% total, maybe 1 to 3% I can see putting into crypto.
For me, outside of my company, it's 100%, and that's only because like on one of my credit cards, the rewards goes to Bitcoin.
That's fine. That's fine.
I have zero. Like my dad texted me the day, is like, "Hey, do you have retirement set up?" I know a guy, and I'm like, "Well, I'm all in on my company at the moment. If I make $1, I'm spending the dollar on a microphone or a mount or a camera or software or whatever." So,
Yep, that's called bootstrapping, and that's good. That's good for a company to do. And the fact that you are bootstrapping is why are so.
Like, let me
you're still here.
Good job, sir. Good job. It's like
look,
you're still,
anybody else that borrowed money during this this downturn in private equity crunch and venture capital crunch, the only way they survive is if they were able to bootstrap like that. So I'm not saying that in a negative way at all. I'm saying that if you had raised money at some ridiculous valuation, bought all this equipment, and then didn't know or understand the value of money and needed to go back to your investors to say, hey, I need some money, they're going to say no. And then what's going to happen? You're going to sell all this stuff for pennies on the dollar. So that discipline that you had by doing that and bootstrapping and spending your own money, hoping that times would get better, right, is the greatest way to build a company. Where every dime was spent. What your budget should be for overhead, for this, for that, for the other things. That's the discipline that was missing for the past 5 years.
Yeah, I hear these stories of like, oh, I had a $20 billion evaluation and I raised whatever, and I only sold 1% of my company. And I'm like, and then you hear what they had, and you're like, you didn't have a company, you just had an idea, and you were basically a really good salesperson. Again, I mean, I guess that's what the world is really good salespeople and con people, and maybe con people is not the right words, but like the fact that, like, going back to SBF, the fact that they were able to raise capital on just kind of like a, I think it's the emperor's new shoes type thing. Oh, Frank invested, okay, I'm gonna invest it. Mark's invested, I'm gonna invest it.
They specifically were it was a specific type of con.
Well, yeah, we don't need to get into that.
Well, no, it's interesting. I mean, because it speaks to exactly what they were doing. Is it was during a hyped bull run.
Yeah,
and you know what like a timed term sheet is? It's where basically if I give you a term sheet, like a 24-hour term sheet or a 40-hour term sheet, you've got 48 hours to look at this term sheet. The terms may disappear, change after that 40-hour period. He was giving out 15-minute term sheets. Total FOMO. Like, I've never heard of a 15-minute term sheet outside of the SBF trial. Like, have you? I mean, like, you've been in the world long, like traditional investment. I've never heard of a 15-minute term sheet. That's insane. That's literally unheard of.
I'm gonna start. You have. Do I need to make a decision now? No. You have plenty of time.
15
How much
minutes.
time? You have 15 minutes.
Exactly. So he was manufacturing FOMO. Right. It was clearly. Anyway, we're running out of time to talk about anything else. But I do want to touch on. I'm not going to have time to. We have a comment from. Okay.
Oh no, I said the same thing.
Oh,
at
okay.
The exact same time.
Yeah, so I was going to talk about the enterprise stories, but those are not as exciting as the ChatGPT story, so we'll skip over that this week. Very briefly, the two other like filler stories kind of were there's a bunch of consolidation happening in enterprise. That stuff kind of got swept under the rug with all the other bigger news this week. And there's been a ton of layoffs, which would have been more of like a Jim story because there was some viral videos that came out of that in enterprise and elsewhere in tech.
Everywhere.
Like just big names laying off big amounts.
Well, just like, I mean, the just anecdotally, like I know 3 people this week that were laid off.
Yeah. Like Cloudflare and Google and like big companies are laying off hundreds and thousands of people.
In the people I'm thinking that I know anecdotally, they're not shitheads.
Right.
They're just like, hey, we're closing that project. We're moving away from that. We're doing this and that. And you're just like, oh.
So the thing that went viral this week, and I'm definitely going to save it for next week too, because I want Jim to do a reaction to this video. There was a gal who was an account executive at Cloudflare that she recorded her, because she was a remote worker, she recorded her exit interview, and they were telling her that it was for performance, and she was holding their feet to the fire and like, no, I've had amazing performance review at everything. I've only been here for 6 months. 2 of those months were November and December. We have a 2-year sales cycle on like closing sales, so like I've only been here for 6 months, so how can I have a bad performance? You know, I've got a whole bunch of stuff, and they were just clearly just using fake metrics to fire.
Is that
people.
it? Can
That's
I see
her.
it? I want to see it. Let's see it.
Yeah.
Let's see it.
Well, it's an 8-minute video.
Okay.
So
well, I'll watch it from home. Here's the thing. This was the recession that was pushed off, because once again, why is there inflation? It's because there's more money chasing fewer things. And we had a lot of people. I thought last year, I'm blown away by the fact that like Facebook and Google and X specifically kicked it all off, right? Kicked it all off by firing basically the whole staff. Oh, you can't run that. Watch me. You've already developed it. Fine, I can. So, but like, I don't know why those other companies didn't take that as an opportunity to just mass fire all the mids. And they didn't, but maybe they waited until this year. Maybe that's starting now. I haven't looked. As far as I saw, employment data looked pretty strong up until like literally yesterday. So let's see what happens.
I think one thing
I like this data that you guys are giving me, that you actually know people, because to date I don't know anyone.
Yeah. So what does Jim say? Like it's a recession if someone you know gets fired.
It's a depression when you get fired.
You get fired.
Yeah.
So one thing though is like to consider is it is election year.
Yeah.
So obviously the government's going to do. First of all, it's their job to prevent this stuff to happening anyway. But like, I think they're going to move heaven and earth. Maybe it is print even more trillions of dollars just to get through the election. You know, so
maybe
that's one thing to think about.
Yeah, it's possible.
And then going back to, this is more Jim's department, but you know, like anytime I fire somebody, you know, I say it's just not it's just not a professional fit. It's just not a culture fit or professional fit. Like, even if it's for cause, even if it's like, because Texas is a right to work state, you know, but I also understand that if you fire for cause, like, then you have to prove that, you have to back it up. And then it's like, okay, if you're a small business and maybe you don't have the best HR practices or checks and balances, and you haven't been, that kind of thing, even though it's like, you know what, Mark's a shithead, I'm going to fire him. Hey, it's just not a good fit. Why? It's just not, it's just not a professionally. It's not a culture fit.
The fit is the CEO thinks you're a shithead.
Right.
You won't stop being a shithead.
But if I say it's because like, hey, you don't come to work enough, prove that.
Right.
Do you have that proof? And so anyway, and I know that's more of a Jim department, but
yeah.
But going back to that, I'm surprised anybody would ever, because again, in that case, can you back it up?
It was a major.
I think that people are so used to this dating mentality where you break up on the app, you don't even ghosting, and they mass fired like thousands of people a couple of years ago, got banged up for it, right? By doing it, just being on a webinar or something. The answer to the question is, we need more unemployment to defeat inflation. And if that's actually finally happening, and the government can only do so much. There's half the people that want this government to continue going the way it is, and there's half the people that don't. My point is the government can't prop up that market. They did everything they could by printing more money. There's no way that anyone's going to let them print much more money based on attitudes that are out there. So the chips are going to lie where they lay. We've had the longest inversion in the yield curve, and usually the longer the inversion, the worse the downturn. And you've got people that don't, either weren't productive enough to have money in the market in 2000, but definitely before that, when I got into the market, if we were able to pull up a map, from basically 50 years before, say, 2000, you can see that there were whole decades where the market was flat. And we haven't seen that. We saw market up 50% in 1 year, and people are used to that.
Well, I
think
also it's again, all I can speak to is anecdotal and whatever. But if you're looking at TikTok as an indication of people's work ethic or their work drive or whatever, but
you don't have to be as productive anymore.
Well, let me finish my train of thought. The point I'm trying to make is, like, if you use TikTok as a barometer of work capacity, like, I still work my ass off. Granted, I am the owner of a company. I get it. But, like, you have all these TikTok trends of people like, you want me to work? You want me to do this? You want me to do that? Like, I don't know if, and I get, though, this generation, I know it sounds like boomer or whatever, but it's obvious. You look at people and like how much they work or don't work. Luckily here we have a good team that has a buy-in, but there's so many people that don't buy in, and they're just getting by to get that paycheck.
Yeah, but you haven't worked a ton of like big corporate jobs in your life. Like,
I haven't.
Most jobs don't require a great work ethic. Like when I worked at Nokia, like I had a stronger work ethic. The reason why I didn't like the job is because my work ethic was stronger than the culture. Like, it was like you were encouraged to go on these stupid 3-hour lunches and take 3 meetings a day that were like an hour long. That was just like, there were pointless meetings that could have been an email. And that was just how that corporation operated, because it was the number one.
Nokia?
Yeah.
Are they still around?
No. They were the 5th largest brand in the world at the time. This is the 90s.
At the time.
Yeah.
But again, that's where I don't mean your train of thought, but like that culture probably is what led to them failing.
No, it's not. Because every big corporation is just like it. IBM's just like it. Microsoft is just like it. When you get into certain departments and certain large, any type of company above a certain size, this is why people are able to do the thing that somebody that you and I both know does, where they have like 4 jobs. They're called fake email jobs. You only really are putting in a good like 4 to 6 hours a week and showing up for meetings and pretending like you're working, So like, that's why this is where the contraction, I think, is happening. Is pandemic exposed the fact that a lot of these jobs didn't need to exist, like, and they were, But
also, I think there's a culture of, not wanting to go work. Why do I have to work to survive? And maybe that's just a TikTok.
But nobody.
I know nobody wants to work.
Yeah,
it's like, what do you want to do in life? Stay home and watch TV and get fat.
So I mean, look at the evolution of work culture, right? Most people didn't have to think about, even if they were working 40 or 60 hours a week in like the 40s or the 50s, at least they knew the company was going to be, and the company was going to be there to take care of them, so they were okay with it. But now we've taken away that certainty, where that the company, there's any kind of reciprocal relationship between the company and the worker.
Yeah.
And so they're like, well, if you're not going to be there for you, why should I give you anything but the bare minimum?
Right.
That
I've never heard that point before. I think that's an excellent point, where it's like, there's the buy-in to the company because the company's so stable that no matter what, it's there. And if you have pensions, it's there. But nowadays you have, what was that company? Oh, Enron that had.
I saw the Jim Downey bit you were trying to set up, and he wasn't biting on it.
He was killed it.
Yeah.
Like, you were not a good player here, buddy.
I'm trying to actually give factual good content and advice. I'm not here to joke all the time.
Not advice.
Thank you so much.
Conceptual thoughts. Anyway, realistically speaking, I think the difficulty that we have here is that we started off as a a country that built stuff and did stuff and grew stuff and sold stuff, and now we're a country that consumes stuff and eats stuff and watches stuff on TV, and we don't do stuff.
Right.
And the stuff that we do is, mostly robots and bringing Intel and all these things back into the United States, because we realize that our supply chain is very delicate. And if we stop consuming stuff, or we want stuff and we can't get it, we might need to have it here. And so you're going to have to see an attitude adjustment from these people who are not used to getting their hands dirty again. And I think we're seeing that pendulum swing that way. AI is exposing that we really don't need you to answer that email. CRMs can kind of do that for you. And so a lot of those people are going to have to get their hands dirty and learn how to work on a farm.
Sagar and Jetty
something.
from Breaking Points has a good video that came out, I think either this week or last week, and he breaks down like Boeing, because I guess I don't know the story, but I guess one of their planes is kind of start falling apart in the air.
737 Max has had problems for a very, very long time.
But his point in that video was Boeing used to be, it's basically that whole situation is dog whistle of America in general, where America used to build stuff. It used to stand for something. And now with Boeing, you see the decline of that, which is also kind of synonymous with culture, with finances, with everything we've been talking about today.
Yeah. Okay. So speaking of emails being answered by the CRM, let's talk about this ChatGPT story, because we touched on it last night with Web3 Ready as well. But it is essentially this new Play Store, or the App Store, but it's for GPTs. Here's what is interesting about it. So you've had custom GPTs for a minute. And anybody that is listening to this that has played with custom GPTs, we built a few for internal usage here at the company. What it allows you to do is to not just train ChatGPT on a custom data set, but it allows you to directly integrate software into the interface. So you can just log into a ChatGPT-like interface and deal with your own native data set or your native APIs. So we could, for instance, build a custom GPT that was only available to our sales team, Ryan, that dug directly into our instance of Apollo or our instance of HubSpot. And you could ask it questions about the 75,000 names that are in your database and say, okay, when was the last time I talked to, Jane Doe over there at IBM or something? And it would tell you that, and you would analyze your communication history, and you could ask it to go out and analyze its Twitter feeds, because it's got that Bing integration. It's got everything that's integrated with it. You could actually come up with a great way to rekindle a cold lead. I just came up with this use case on the spot, but this is the type of stuff that you can do with custom GPTs. Now they're like saying, okay, these people have been cranking out these types of custom GPTs at an enormous rate. 4 million of these custom GPTs have been created in about a month and a half, 2 months. We're going to build a Play Store. Now, what this unlocks is if you have access to plug into custom APIs or APIs of companies that you own or that you have like a financial relationship with, like say you have an Etsy store and you can plug into the Etsy API, you can build custom GPTs that directly, if they get popular, will throw tons of users into your sales funnel. And that sales funnel can be digital or it could be physical product or whatever it is, as long as it's digitally integratable via an API and your custom data sets. This is going to be enormous. This is going to be kind of the future of, a lot of things. This is going to be how, Microsoft and OpenAI start to make back some of their investment, I think.
I mean, yeah, because it's similar to the Apple marketplace, right?
Right. So right now they're not standing in the middle. They're not taking a piece of the pie, but what they are doing is they're standardizing the relationship between the user and your products as like a CEO of Harper Bellman, or your products as a financial advisor, and saying, okay, we're going to standardize this. Everything's going to go through a ChatGPT like interface because it's so much of a nicer thing. It makes things better in XYZ way, so that in the future, this is just the track that all centralized technology takes. They're going to take a piece of that transaction, or something's going to happen where they're going to get a piece of the pie. I mean, it stands to reason. They're not just going to give it away for free forever. But we're in that stage right now where people that move first with these with this new paradigm are probably gonna make the most amount of money.
Well, like back to the Apple thing, like one of my best friends who, he was a computer programmer. The thing that made him the most mad of his entire life was in the early days, he was able to develop an app that basically turned your phone into a wireless USB device. Granted, that's not a big deal nowadays, but before, like using your phone as a storage device was unheard of. And he put all this time and all this effort in developing this app, put it on the Apple Store, but it didn't get any play. But the dude that did the fart app was a millionaire.
Yeah.
And he was just like,
Flappy Bird dude made so much money, he said, "Stop giving me money. I'm going to take the app down." It's just to make the bird go up and down.
Right. But it's just like but my point to that is like, when it's like just the wild, wild west.
Right. The random stuff makes
the random stuff. I can't imagine an app making millions of dollars nowadays that it's a fart noise.
Right.
It still might be possible, but that just seems like a free thing,
right?
Not necessarily a paid thing. But back in the day, Wild Wild West, it was a paid thing. So I think right now, if you are a programmer and you're wanting to make money, if you are laid off, this might be an opportunity. What's that?
Learn to code. Learn to get ChatGPT to code for you. That's what it is.
Yeah.
No, like, so some of the more interesting ones that I thought, and this is an actual. We're almost done. I know you're checking your watch. We're almost done. The last one that I'll throw out there, it was Wolfram GPT. So Wolfram Alpha, are you familiar with that? So it's basically a paid API that allows you to do a bunch of advanced math and formulaic functions. They built a Chat GPT app that's in the store that does some of the stuff for free, but then, like, just like with Wolfram Alpha, if you have a paid account, you're going to get a higher level of access to some of the more advanced things that it can do through a Chat GPT interface. So it's a sales funnel for Wolfram Alpha.
That's pretty neat. I like that, actually. That's pretty neat.
Yeah.
Cool.
All right. So yeah. We're not going to do a 2-hour episode today. Unless you've got another hour of ETF talk in you.
No, absolutely not.
Okay, Brian, you got any closing thoughts?
No, sir.
All right, well, let's call it a day. Thanks for taking your lunch with us at the Merge Roundtable. We'll be back next week with more. Hey, thanks for watching The Merge. We've got a ton more stuff for you to watch on YouTube, on Instagram, on TikTok, everywhere. Check us out.